Good morning and welcome to Stock Market Today for Friday, June 14th, 2019, Flag Day here in the U.S. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. You can follow along with this show. Get daily stock ideas for you to consider hitting your inbox every trading day before the market opens. So U.S. equities closed higher in Thursday's trading, finishing near the best levels of the day. Small caps actually outperformed on the day. Energy led at the sector level as crude oil traded higher. Communication services and consumer discretionary also outperformed. Defensive sectors were relative underperformers. Healthcare was the only sector lower on the day. Treasuries were stronger, with the curve steepening. The dollar was stronger on the euro cross, but lower against the yen. Gold finished up 50 basis points. WTI crude gained 2.2% following the reports of the attacks of some tankers in the Gulf of Oman. As we get to the desk this morning, though, futures are down 30 basis points to start the day. Asian equities were mostly weaker overnight, with China down nearly 1%, but Japan actually finished higher on the day. European markets are weaker this morning. Treasuries are stronger across the curve. The dollar is down against the yen, but stronger on the euro cross. Gold up over 1%, and WTI crude is giving some back, down 50 basis points to start our Friday's trading. So for the S&P 500, what we're really seeing here is churning below the 2,900 level. That's really kind of marked the activity. Now, what was interesting about yesterday is for most of the week, Monday, Tuesday, Wednesday, stocks closed near their lows of the day. Tried to rally and then closed near the low of the day. Yesterday was the reverse of that. Yesterday, stocks actually closed near the highs of the day. But as we did say, futures are pointing to a lower open here today. Now, support remains in the 2,800 to 2,850 zone. Resistance is in the area between 2,900 and those all-time highs near 2,950. Again, the key question, will we see a bullish shift in the RSI? Now, we had an update yesterday and it slightly turned higher, but we still can't get above that 60 level on the RSI. So for all intents and purposes, RSI does remain in bearish ranges, right? The RSI, a lot of people like to look at it and they say 30 is overbought and 70 is oversold. And that's a good rule of thumb in a sideways market. However, when the market starts to trend, that indicator will shift. And in a strong uptrend, you won't really see an oversold condition at 30, but you will see overbought conditions above 70, and the reverse is true in a downtrend. So that's why it's kind of important to know the characteristics of the indicator, and that's why I'm watching. So what we're seeing here is that stocks topped out and traded lower throughout May. Rally attempts could not get much above 50, and now we can't get above 60. So the indicator is said to be in bearish ranges. Add to that, the Chaikin money flow remains neutral with a bearish tilt, we'll call it, here down below the zero line. So the indicators are somewhat cautious. Market remains choppy. I think we could see some churning right around this 2,900 level. The round number tends to be psychologically important. And our short-term overbought, oversold indicator is currently overbought for the SPY. So let's dig in now. What am I talking about in my note to Chaikin Analytics clients today? Stocks close higher as small caps lead on the day. That's a turnaround. We haven't really seen small caps outperforming, and now they have for 2 days in a row. The relative rebound in semis will be tested by Avago today. Broadcom, I still call it Avago, force of habit, but Broadcom had some negative guidance last night. A lot of the semis are trading lower here this morning. Credit market continues to show signs of caution. We'll take a look at what that means. The rally in energy has been on bearish money flow, so we'll take a look at that as well. Futures, as I said, point to a lower open here today. So now the power bars for the major indices. Dow added 41 basis points yesterday. 8 bulls to 4 bears, so no real change there. S&P 500 saw a bit of strengthening in its power bar ratio, 125 bulls to 66 bears, as the index added 41 basis points as well. The NASDAQ was a slight outperformer, 23 bulls to 10 bears. And there's your small cap rally, up over 1%, so some nice outperformance, 462 bulls, 374 bears. Now, bonds traded higher, yields traded lower. Continuation of that today. You know how I feel about yields. Energy was the big outperformer yesterday at the sector level, as we said, on that rally in crude oil, 1 bull to 12 bears, according to the Chaikin Power Bar. Large cap stocks and small cap stocks are bullish. Major markets are mixed. Now, our stock of the day today is Molina Health. MOH has a very bullish Chaikin Power Gauge rating due to very strong earnings performance, very positive expert activity, and attractive financial metrics. So very bullish stock, strong trend, strong industry group, type of name we want to consider. And we have a bit of a personality change taking place here. Stock goes from a neutral rating to a very bullish rating, and it begins to outperform the market. Money flows bullish. We are above the rising long-term trend line. Tried to break out. Now we're pulling back to test support. For me, given that dynamic, given the overbought nature of the market, I want an oversold condition in this stock. I want to see support here hold in kind of the 140 to 145 area. While the market works off this overbought condition and becomes oversold, or the stock rather becomes oversold, and then all else being equal, Molina then starts to look interesting to me as a long idea, but overbought market and the potential for this false breakout here does give me some pause. Either way, Molina is a name you should be adding to a bullish watch list today. Taking a look at our sector tracker now, the movement of the major sectors over the last 5 days, you can see that all but utilities have been higher over the past 5 days. I do think this is a bit of a counter trend move in utilities, and I wouldn't be surprised to see the group start to regain its uptrend, especially as rates continue to come in. But discretionary tech and communication at the top of the list. Material staples, healthcare, and industrials are middle of the road. Energy, real estate, fins, and utilities round out the bottom of the list. Want to see tech continue to do well. We'll see how tech reacts today to the negative news out of Broadcom last night. Now, our industry in focus, oil and gas equipment and services, which over the past 6 months has been an underperformer, underperformed the S&P 500 by over 22%. And the power bar ratio, which measures future potential, is very weak. 19 bearish or very bearish stocks, 1 bullish or very bullish stocks. It's currently ranked 21 of the 21 subsectors that we track, having moved down 2 slots over the past week. Now, some of the indicative names there with very bearish Chaikin Power Gauge ratings: RPC Inc., ticker symbol is RES, and I will note that's a $7 stock. Core Labs, CLB, and Helmrich and Payne, HP, all carrying very bearish Chaikin Power Gauge ratings here. So let's take a look at the sector, the industry itself. Here's the XES, the oil and gas E&P ETF. You can see there's that very bearish rating. Let's run through our analysis the same way we normally do. Look, it's been an underperformer since last summer, and the intensity of that underperformance has been picking up. So the market and model are in agreement to the downside. And if you read my note today to Chaikin Analytics clients, I highlight the energy ETF XLE as having had a bit of a rally of late, but on bearish money flow. Here it's much the same. Money flow is bearish, below the declining long-term trend line, not quite overbought, but moving towards an overbought condition and actually turning lower. I wouldn't be surprised to see us fail to hit overbought levels again, and that would be an indication of just how strong this downtrend is for XES. Continues to be a group to avoid. Continue to look to avoid the names in that group, or look for opportunities to open bearish positions. Take a look at the energy sectors today if you're looking for some bearish names on the short side of your portfolio. Yesterday's S&P 500, movers and shakers, the gainers and losers across the major index. AAL saw a price target increase at one of the big sell-side shops yesterday. That sent the stock higher by 6.4%. CF, some USDA data out that investors took as a positive signal for CF. That stock moved higher by 4.71%. Disney saw its numbers, its estimates increase at Morgan Stanley. So Morgan Stanley takes numbers up on Disney, and I will note that Disney is knocking on the door of all-time highs. The stock is up 4.44% yesterday. XEC, didn't see any real news there to send that stock higher by 4.2%. UAL goes along for the ride with AAL up nearly 4%. And for AAL, it wasn't a price target increase. I apologize. What it was is reports that they are increasing prices on their tickets. So investors took that as a positive. Monster led to the downside yesterday, down nearly 5.5%, but didn't see any real news to drive the trading. Twitter, no real news there as well. Looks like a bit of profit taking over the course of the past week or so in Twitter. Stock down 3% yesterday. some news out of Nectar yesterday on a drug where Eli Lilly is collaborating with them, sent Lilly down 3%. Alexion, no real news yesterday to send the stock lower by 2.8%, but I will note that they are presenting some data on one of their drugs later today, and BLL down 2.5%. Didn't see any real news to take that stock lower on the day. So let's dive in. Relative test for semis today, and everybody here knows the importance that I place on this chart. It's the ratio chart of SMH to the S&P 500. And the reason I give it so much importance is because the direction of this line is highly correlated with the direction of the S&P 500, and it tends to happen with a lag. Now, semis were underperforming throughout the month of May. Coincidentally, the market traded lower throughout the month of May. Semis hit support and rebounded on a relative basis. So did the market. Now, we've regained the 200-day moving average, which is flat. However, the news out of Broadcom last night has that stock trading lower by 9% here as of this recording, and a lot of the other semiconductor names are going along for the ride to the downside. So Skyworks down 4%, Xilinx down 3%, Micron down 3%, and AMD down 3% as of this recording. Now, for this ratio, here's what we're talking about again with the RSI. Notice how, while it was in an uptrend, it never became oversold, and now becomes oversold and cannot become overbought. So the RSI for the ratio of semis to the broader market remains in bearish ranges, and we're bumping our head on resistance on an absolute basis and likely to see the semis trade lower today. To me, that could carry bearish implications for the broader market. So just want everybody to be aware of that, and want everybody to really be aware of why I place so much importance on this metric. Credit markets continue to show caution signs. This is the high yield relative to Treasury. So we're looking at the iShares high yield corporate bond ETF relative to the 7 to 10 year Treasury bond ETF. When this is rallying, this is a risk on type environment. Means investors are bidding up high yield bonds relative to treasuries. Now, since topping out in October, coincident with the market, we've kind of been in this downtrend. The ratio is now below the declining 200-day moving average, below resistance. Actually tried to rally, didn't quite hit the resistance mark, and have now turned lower once again. The reason that this is important is, again, because of the relationship to the S&P 500. Notice that as this line was rising, the S&P 500 was rallied to all-time highs. And now as this line is consolidating and moving lower, the S&P 500 has fallen into a choppy range. And just so you can see, I've given you the correlation. So what we're looking at here is the correlation of this ratio, HYG to IEF, to the S&P 500 on a rolling 3-month basis. 63 days is roughly 3 months of trading. And you can see that there is a positive correlation. And oftentimes that positive correlation is strong. So should high yield continue to underperform treasuries, that would be a bearish signal for the equity market, and I want to make you all aware of that. Rally in energy, but on bearish money flow. Here's what I sent this in my note today. XLE tried to rally here, but can't get out of bearish ranges, and money flow continues to be bearish. So XLE, I could have drawn a resistance line here. We're below resistance. We're below the declining 200-day moving average. Here's that dynamic at play again. Notice that during this downtrend, we become oversold 3 different times and never become overbought. And now we can't even get above the 50 level for the RSI. So that's your indication of how strong that downtrend is in energy. We looked at services, could have easily looked at EMP as well. As a matter of fact, I did that in my note today as I highlighted CQP as a bearish stock of the day. Why did we do that? Because we have a very bearish stock in a weak industry group, in a weak trend, underperforming the market. And this is a bit of a personality change. So starting to underperform the market and model in agreement, dynamic duoing gear. Overbought, bearish money flow below the declining long-term trend line. I think you want to potentially look for bearish opportunities in CQP today. So head over to chaikinanalytics.com/today to sign up for that email to follow along with this show. I hope that everybody has a great weekend. I will be back here on Monday. Happy Friday, everyone.